Good afternoon and welcome. You're watching the Business Today show. This is the market closing edition. I'm Sakshi Batra. This is where we get you all the market closing action on D Street. First up, let's take a look at what's hot in the corporate and the financial world. Markets turned choppy following 3 sessions of gains despite a higher open. Sensex trades flat to marginally lower near 84,200, while Nifty hovers near 26,000 mark. Autos, pharma and PSU banks gain in trade, but IT stocks drag. NSE Chairman Ashish Kumar Chauhan says hikes in Securities Transaction Tax aim to curb market speculation, acknowledging traders' concerns. He adds that the government is exploring broader measures. M&M Q3 results beat estimates with strong performance. Consolidated profit up 47%. Company crosses 50,000 crore rupees quarterly revenue for the very first time, while retaining the number 1 SUV position with 24% market share. Trading firm Jane Street continues hiring IIT students for its Hong Kong team despite SEBI action. Reports suggest offers are being made via pre-placement internships, with past packages crossing 4 crore rupees annually, even as the firm faces allegations of market manipulation in India. MCX gold and silver surge on Federal Reserve rate cut hopes as weak US data and softer bond yields lift the sentiments. MCX silver jumps 10,000 rupees to now trade at 2.63 lakh rupees per kilo, while MCX gold has gained 1,700 rupees to now trade near 1.59 lakh rupees per 10 grams. Quickly looking at how the markets are trading at the last half an hour of trade. You already got to know what's the Nifty at. It's at 25,950 right now, just about holding up beyond the flat line. But it's the auto space that's definitely driving in the fast lane. You can see names like Eicher Motors driving up high, 6.5% up after the earnings. We've also seen some other names like Maruti, Suzuki and Tata Motors also inch higher in trade. Also on the back of earnings, you're seeing Apollo Hospitals as among the gainers. You have about a 4% uptick as far as the stock is concerned. State Bank of India is another one that's also gaining ground right now. Those are the top gainers as far as the names on your screens are concerned. The market breadth is largely towards the positive side, as you were already seeing that the auto space is higher, PSU banks, pharma, they are higher, but IT is down in trade, as we already shared with you. Mr. Chokkalingam, the founder and MD of Equinomics Research, as well as Kunal V, Parar, Vice President, Technical Research, Choice Equity Broking, our market experts of the day are both joining in. Welcome to you both, and thank you so much for taking the time out to be with us on Business Today and India Today Television. Let me quickly first turn to Kunal and take a technical view on the markets. It's been a very choppy ride through the course of the session today. What do you think is preventing the markets to really soar up to 26,000 mark? That continues to remain a barrier despite good news flowing in from the budget and from the US-India trade deal.
Well, good afternoon, and if we talk about the market right now, Nifty is doing very well, trading at 25,950 level, and it made a high above it, 26,000 level, but couldn't sustain above it, and trading at 25,950. Now, strong support is there at 25,750, and except this IT, I think all the sectors are giving helping hand to Nifty, and not today, but yeah. We may see some good upside momentum in upcoming trading session, even beyond the level of 26,200. So nothing to worry about this momentum. And if we talk about FI, DI activity as well, then since last few days, FI is also giving its helping hand to the Nifty. So if we talk about this month, then in this month itself, FI has made some purchase of around 5,000 crore in cash, and if you talk about FNO, then 10,000 crore in the future segment. So all the indication goes in favor for creating any long position only. So from my side, it's an upside news only. Any correction up to the level of 25,850, 8,000, 25,800 would become a good buying opportunities with strict stop loss of 25,750. If we talk about upper side, then 26,100 would be our first target, and if Nifty breaks this level, then one way rally would be there up to the level of 26,300.
Right. Let me also take a view from Mr. Chokkalingam there. How are you looking at the current setup in the markets and what's attracting your attention within various sectors and themes right now? What do you think is in the front line of making more money in the near term?
Yeah. First of all, on the market, I believe market may be little volatile till March end or mid March.
Okay.
But I am extremely optimistic on FY27. That is starting from April. I expect market to rally. FI selling has moderated. The trade deal likely to happen with the US also finally, and a lot of deals are happening with many other individual countries. With the EU has already happened. Now domestic institutions have become a more dominant source of stakeholders in the Indian equity as compared to FII. That is also positive. The retail investors flow also every week it is growing. Last week also about 10 lakh investors have come in. So what is still driving down the market or keeping stagnant is the fact that there is a shortage of liquidity. So a lot of liquidity has gone away from the secondary market to promoters, IPOs, all that. So I believe also a lot of people tend to restructure the portfolio at the fag end of the financial year for reducing their capital gain tax, and that obviously leads to more selling pressure. So all that should go over, and auto should continue to do well. I would be a little cautious on IT and pharma, but auto and also the different stocks like HAL and Nifty stocks like L&T, ITC. These are some of the stocks I like, and I believe they would continue to do very well in the next financial year as well.
Okay. Well, you rightly pointed out, Mr. Chokkalingam, that the markets were definitely troubled with the STT hike that we saw in the budget. Thereafter, however, some good news from US-India trade deal pulled up the sentiments afresh. But on the Securities Transaction Tax, we've actually seen how the NSE MD and CEO Ashish Kumar Chauhan, he has said that Securities Transaction Tax has been raised over the years, including in the latest budget for equity futures and options. While active traders are definitely concerned, he has said that the government's broader aim is to curb excessive speculation in the market and more measures could actually follow over time as well. Let's listen into what he had to say.
STT has been increased many times over last several years. In pretty much every budget there has been an increase. This time also there has been an increase in specifically equity futures and also equity options. And naturally, people who are sort of daily trading, they have an issue. But overall, government has a perspective that they want to reduce speculation. And there are, naturally, this is one of the ways they think they should be able to reduce speculation. But there are other ways also they probably are exploring in terms of ensuring that product suitability guidelines and also combining many expiries into one and things like that. But that remains to be seen how, in addition to the fiscal framework to a social issue, there are other ways to handle it. And I am sure at some point in time they will work on that too.
Mr. Chokkalingam, let me take a view from you. The markets were definitely troubled with this STT hike, especially looking at the huge amount of trading volume in options trading that we see here. 154 billion versus 12 billion in the US. So the volumes are pretty high here. But at the same time, market regulator has constantly pointed out that over 90% of investors in futures and options continue to lose money. And therefore, we are seeing consistent efforts and steps from both SEBI as well as government now to somehow curb speculation, somehow curb volumes as far as the F&O space is concerned. In that respect, how do you see the STT hike? Will it be able to curb some of the speculation that we've been dealing with for some time? Do you think some of these preventive measures will impact in the way the volumes are there for the exchanges and the end impact on the retail investor? How do you gauge all of this?
I think, there are different perspectives. Exchange perspective is different from regulator, and government perspective is different from regulator. My point is that as a student of economics, it is very, very, very bad development for the government. Economic theory says that the purpose of having a capital market is to mobilize resources for economic development. But now if you see, the companies are mobilizing money for offer for sale. A lot of retail investors are shifting the focus for F&O just for speculation. So the fundamental basic premises of or objective of stock market is losing its core value. So therefore, I am for curbing heavily the F&O trade because it is not helping the retail investors as well. As you rightly pointed out, 90% of the people are losing money. So it should be combination of both STT as well as some other quantitative restriction to curb, because a lot of people are losing money and a lot of people have shifted their focus. I have seen professional doctors, advocates during market hour looking at the F&O and trying to teach me also because my knowledge is zero. So I was surprised. And if they're making money, it's fine. When 90% are losing money, I think I am for favoring higher STT and F&O for speculative purpose and more
Okay.
restrictions so that money can come to genuinely good value stocks, and they can also grow through right issue, all that. But now a lot of those small cap stocks are struggling.
Right. Let me take even Kunal's view here. Kunal, how do you see this step of hiking the STT? And what do you think the aim that Mr. Ashish Kumar Chauhan clearly mentioned of the government is to curb speculation? How much of that will be able to be seen with this step?
Well, decision was actually right, means to curb this volatility particularly, and the speculation STT, government raised this STT. But one question is that if you are raising this STT to curb this volatility and speculations, simultaneously you also reduce the STT on the cash segment. Also, you need to reduce the LTCG on the long term capital gain. Means
Okay.
there are two ways. If you really want to decrease this speculations, and if you really want to increase the long term
Sure.
capital investment, then you have to do this. But I didn't get any step that government took in this budget. So it's a big question mark on how government is taking this in a serious way to curb this volatility. So it's a question mark from my side. Nothing to comment on further.
Sure. Interesting point of view there. If the government's intention is to curb the speculation in F&O to reduce the retail participation in the futures and options to protect their interest, there should be some way of incentivizing investors' investments into the long term, in the cash segment, maybe reducing some taxes there. That's the big ask that continues to remain even after the budget from some of the market experts there. Remember, when we talk about the markets, it's the capital markets regulator, SEBI, that's also ramping up measures to bring in foreign investors back to the country. And here's the SEBI chief speaking about the latest effort, the single window automatic and generalized access for trusted foreign investors, or in simple terms, the Swagat FI scheme. Let's actually listen in to what he had to say.
Swagat FI is a category of FIs where we have their more trusted sovereign funds or publicly traded funds, insurance funds and FPIs, which we say that they will be able to come to the Swagat FI framework, where we will have a much longer period of registration, and practically they would be able to do a lot of things with one license. So this is basically for ease of doing business for such FPIs.
Mr. Chokkalingam, how do you really view this step, and do you see the foreign investors who've been pulling out in a huge fashion from the cash market in 2025? Some buying has emerged in in February of 2026, but up until January we saw almost 3.5 lakh crore rupees being pulled out from the foreign investors in the cash market. Will this scheme somehow urge FIIs to again look at the Indian market?
FIs will come back definitely, because last 20 years the kind of wealth they have created is enormous. There are a lot of small cap have become even the Nifty stocks, and FIs were there in participating. So the regulator as well as government definitely have to take more steps to promote, because it is not only for the stock market, even the economy will have a difficulty if FIs continue to take out money. Roughly the current value of FII money in the Indian equity must be close to 700 billion, which in itself is close to our forex reserves. On top of it, we have a $700 billion of forex, $700 billion of external debt. So if we combine external debt with the FII current market value, that will be approximately 2 times our forex reserves. So it means a lot. You can't afford to see continuous outflow. and therefore the government has to, as well as regulator have to take measures, to stop this and encourage the money coming back, and it will come back. If you have a few encouraging solutions, definitely the money will come back, and it is needed.
Okay, the money will come back and it is needed at this point in time. That's what Mr. Chokkalingam believes. And all these steps should augur well for the foreign investors to once again turn a favorable eye to Indian stock markets in the cash space. But Kunal, to you, it's 10 minutes before we shut shop for the day. Any BTST, STBT trades that you would like to suggest for our viewers? Kunal?
One stock is there which looks very attractive for BTST, and it's Maruti Suzuki right now trading at 15,416. And recently we have seen this Jan sales data also. So at this level, stock looks very attractive, and it has given a breakout of its cover and formation. So one can get into the stock at present level. Stock is trading at 15,415. If you talk about SL wise, one can keep SL at 15,100. And if you talk about target wise, first target comes at 15,750, 15750. And if stock break this level, then 16,000 would be there. So I think Maruti Suzuki looks very attractive and on an early chart for BTST.
Okay, BTST, Maruti Suzuki, we could see onward going forward, 16,000 kind of levels also coming in onto this one. But BTST targets and stop losses have also been shared with you. Mr. Chokkalingam, you also were positive on the auto space. How is Maruti looking vis-a-vis some of the other stocks that you've constantly marked on our channel Business Today, like M&M, for instance, that you've been bullish on? How are you looking at this space, and where do you see the favorable trades to come in going forward?
Among large players, I still continue to go with M&M. Couple of days back, M&M has proposed to 15,000 crore capex across all verticals within the automobile, and the performance in January also was fabulous. So I believe firmly that M&M would outperform Maruti and Hyundai. And in component, one can also look at MRF. It has come out with a fabulous results. All the positive triggers are there in terms of tire industry getting fiscal benefit, as well as automobile industry getting it, and also the oil price is down, natural rubber price also down. So entire tire stock will continue to do well. Our take is on MRF. I do not own any of these stocks personally.
Okay. Within the earnings, we are seeing SJVN react positively to its earnings, viewers. This is from the renewable energy basket. The stock has reported a profitability jump of 51% on a year-on-year, and that's how SJVN stock has come back into focus as well. Remember, we are also looking at this strong spike, 6.5% higher. Just look at the last few minutes of trade that have taken place. Volumes have shot up, and it's now again trading at 77.5 right after the positive earnings have actually come in. Kunal, to you, what would you do with SJVN after the earnings?
Well, if we talk about stocks reacting in a very positive momentum, up by 6.5%, and it is also giving a breakout of its intermediate top, which is placed at 74.40. So I think the way stock has been trading on its daily and hourly chart, one should get into the stock at present level with strict stop loss of 72. Now we talk about target wise, first target would be at 81.50, and if stock break this level, then further upside would be there up to the level of 88. So yeah, this stock looks very attractive on daily chart as well as on hourly chart for trading perspective.
Okay. Within the earnings, Mr. Chokkalingam, we are almost towards the fag end of the earnings now, but what has stood out for you in the earnings season so far? Any key sector, any key stock that has truly outperformed and is now emerging as the stock to watch out for?
In large cap Apollo, we have a buy recommendation, and it has come out with a fantastic
Apollo Hospitals.
Apollo Hospital come out with a fantastic results, and I believe robust outlook will continue. And if you like me to talk about mid cap, there are a couple of stocks which have come out excellent results. I can talk about.
Okay. One more stock that I want to ask both of you is on PSU banks, the largest bank that we have in India, and that's State Bank of India. We have seen, the earnings come in strong, and brokerage houses raising their target prices for State Bank of India upwards of 1,300 levels as well. Today, again, the stock is up by 3% at 1180. And with this kind of a move, viewers, State Bank of India has surged past TCS to become India's fourth largest firm after Q3 earnings have sparked this share rally as well. So Kunal, first to you, after this last 3 days of a move on SBI and continuing rally, what is the target that you're expecting in the near term?
Well, right now stock means SBI is doing very well amongst other PSUs, even even amongst overall Indian banking. If you talk about target wise, the way stock has been trading in its charted territory and positive volume, I think we may see very good upside momentum. First target would be at 1250 1250, and if stock break this level, then on a longer run, even it may march its upside momentum towards the level of 1600. So these two targets are there for long term. First is 1250 and afterwards 1610.
Okay. What about you, Mr. Chokkalingam? How did you read SBI's earnings this time around? What is the outlook here? And your overall view on the PSU banking space that you've talked about a lot over the last 1 year as well. How do you see things stand now?
I think the structural changes happening in the market for PSU bank as compared to the private banks in business as well. So I am extremely bullish on PSU banks. They will continue to do well. Yes, SBI has done well, but it is now fairly priced in my view. I would look at PSU banks like Punjab National Bank, which is trading at around one time price to adjusted book value. It's also one of the largest banks. Then Central Bank of India. These are the two banks I believe they can outperform not only the banking index, in entire stock market in the next 1 year.
Okay. Let me quickly also take your view on some of the other stocks that have just come in with the earnings. I'm just going to be marking out a few stocks so all of you can know. Premier Energies have fallen by about 6%. This is despite Motilal Oswal saying that they continue with a buy rating on strong growth outlook. Igrashi Motors shares have fallen by 5%. After the profitability has dipped by 33%, margins have contracted. Mrs. Bector's Food have seen their shares slip by about 4% despite profitability growth and the dividend that has been declared as well. So these are some of the stocks that are reacting negatively to the earnings. On the positive end, you have Avanti Feeds. The shares have gained 4% after positive Q3 earnings across the parameters that we have seen. Remember, this company is also one of the beneficiaries of the US-India trade deal with the exports that they do to the US with regards to the marine exports. We have also seen Juniper Hotels shares up by 4% on strong growth as the net profit has jumped by about 101% as well. Mr. Chokkalingam, any of these names resonates with you? Where do you see, consistent performance going forward?
Among the stock you mentioned, Avanti Feeds one can continue to hold because the tariff for change in these proposals are positive, particularly from US. And I heard about the solar company. My only concern is that suddenly almost every fortnight one new company in solar vertical is floated or one company is getting listed every month. So which means the theme has played out at a peak and a lot of competition is emerging. So one has to be very, very cautious in making fresh investment in solar company. Otherwise, CG Igarashi, Bector's Food, the valuations are highly stretched. So I would avoid even after today's call these two stocks.
Okay, one more stock that I'm going to be discussing is the new age internet stock, and that's Paytm. How would you look at Paytm at this point in time, Mr. Chokkalingam? And Kunal, I'd like your technical view as well. It has achieved third profitable quarter, demonstrated sustained recovery there. Investors are definitely focused on how the company's long-term durability and the quality of its growth will be panning going forward as well. The core business like payments and financial services are now finally performing well. New growth drivers like AI are being expected going forward from here. The stock is just about 0.1% high, extremely choppy at 1160. But I want to take a view from both of you. Mr. Kunal first, why don't you go with it?
Well, if we talk about Paytm right now trading at A160, trading below its 20 days moving average. Not only this, stock has already given a breakdown of its 1240 level, which was acted as a strong support for the counters. Even if you talk about the weekly chart, on a weekly chart, momentum looks very weak as of now. So overall picture looks very on a weaker side momentum. And based on this technical structure, I think some downside would be there up to the level of 1080 to 1040. So from my side, it's a avoid suggestion, not recommending to create any long position at present level.
What about you, Mr. Chokkalingam? A quick answer, and then we'll wrap up the markets.
Short term, it may give some tactical upside, but long term, I am very, very negative. Kind of return on capital and competition will definitely get intensified. So negative on medium to long term, short term tactically some return possible.
Okay, fair point. So that's as far as Paytm is concerned. But viewers, let's look at how the markets have shut shop, and we'll come back to both our guests to take some of your queries there. Flat with a positive bias is where we have ended at as far as the Nifty is concerned, 25,942. That's where we've ended at, just saving the blushes and ending minor in the green. Nifty Bank about 1/10% higher, nearing a 2/10% uptick there. Slightly better off. You could see volumes going higher, and the index also ending near the high point of the day. When we look at the auto space, that's the top winner today, 1.2% higher in trade, driving from the front. Eicher Motors, Maruti, these were the big drivers in trade among the large caps that have pulled up the sentiments higher. The broader markets, however, continued to trade weak. You could see both the mid caps and the small caps ending the day in the red right now. 0.07% lower for the mid caps, 0.04% lower for the small caps. Just when we had been seeing that momentum was building back, you could see slight downtake. So the small cap 100 index, in fact, has managed just about a flat to a positive bias uptick. But these are the gainers in front of you. Eicher Motors, Apollo Hospital, State Bank of India, among the top gainers as far as the Nifty is concerned, rising anywhere between 3.5% to 6.5%. Also, Maruti Suzuki, Bajaj Auto, ONGC, these are some of the other stocks rallied anywhere between 1 to 3% in the trade today. But on the downside, IT heavy names like TCS, IT index was the top laggard today, 1% lower. And that's why you see TCS, Infosys both contributing on the downside. Coal India down by 1.8%. These are the top drags in your trade. But let's quickly take some of the queries that have come in from all our viewers there. Saurav Sharma from Delhi says, I have 2 lakh rupees to invest. Can you please suggest about few stocks or the key sectors to consider for a portfolio building? I'm going to be taking this question with you, Mr. Chokkalingam.
Yeah, I mean, I suggest in large cap ITC, L&T, Apollo, and small and mid cap, Voltam and ISGEC. These are the 5 stocks I have a buy recommendation. I am very confident.
Right. We'll take the next query again from you, Mr. Chokkalingam. And this is Pratna from Mumbai. And she wants to know which stocks are likely to benefit from the Q3 earnings over the next 3 months. So after the earnings, where should she take a position?
The results are already out for 90% of the companies. Only 3 days are left for a balanced company. So based on the results, same Voltam and ISGEC, they have come out with very good results, and both companies have got excellent business prospects. So I like these 2 companies, Voltam Transformer and ISGEC.
Okay, next question we have from Jayveer from Gurugram. He says, is it worth investing in jewelry stocks for a 1-year horizon? Mr. Chokkalingam, we have seen how gold prices have, had a parabolic run up first. They did have volatile turn in the last 2 weeks, sharp corrections, and now a recovery again. Gold is back above the $5,000 an ounce mark. How would you really look at the jewelry stocks? We've already seen Titan come out with a strong set of earnings. The stock went up to record high. So jewelry related stocks, are they coming back in favor? I think about 2 days ago, we also saw names like Kalyan, even others like Sky Gold, Senco, all of them rallying in trade. So what do you find within the jewelry stocks at this point?
I may be wrong, but I have a firm view. I would start selling for every recovery in a fast-paced manner, jewelry stock, for 2 reasons. The Q3, they were benefited because gold price was running. A lot of people are running to shops to buy, before further rise. And secondly, some companies had a inventory purchased at a lower price, so that also helped. Now, going ahead, the kind of price rise we saw in gold and even in silver, it's going to be difficult to maintain the same kind of demand we saw in the recent past. Already there are reports of demand slowing down from the households. So definitely next to 1 quarter or 2, the revenue growth will be definitely impacted for most jewelry companies. That's my firm view.
Fantastic. All right, Mr. Chokkalingam, thank you so much for being with us on this special edition. Always a pleasure to speak to you and seek such insights for all our viewers. And viewers, we've ended now the day with about an 18-point of an uptick. We'll just wrap it up here on the Business Today show. But these are the WhatsApp numbers and the spaces in which you can connect with us and send us all your queries with regards to your portfolio-related questions, your mutual funds, or your SIP gold-related investments. news, anything and everything that you need to know about your investments. We get market experts every day to understand better and to find out what your strategies should be as far as your investment portfolio is concerned. So stay tuned with us, and of course, join in tomorrow morning at 9 a.m. with Ava Bakaya to catch all the market opening action.